In this video, you are going to learn how to use ZohoBooks to create transactions, manage small business finances, create financial reports, and manage both customer and vendor transactions. Buckle up because this fast-paced tutorial packs a ton of information explained through practical examples. ZohoBooks is an amazing software, especially if you are already locked into the Zoho ecosystem. That is, you are using things like Zoho Sheets and Zoho Mail and other programs from this company. Go to books.zoho.com and sign up with your email address or Google account. Input the name of your organization and the location of your business. Then select Let's Get Started. Enter the organization name, industry, state. Both the currency and language automatically update on the basis of the country that you selected, but you can select a different time zone. And if you have to pay sales tax, then you can activate that option. I won't cover sales tax in this tutorial, so I'll leave it disabled for now. Press this and click on Get Started. Okay, so we have the user interface here. On the left hand side, you have the navigation pane that provides you options to quickly navigate to different sections such as customers, vendors, transactions, and reports. The clock icon on the top shows you the recent transactions. If you create a record, generate a report, or issue a new form, you will find that activity listed here. The top search bar offers a quick and easy way to instantly find records, accounts, items, customers, and vendors. You can use advanced search with filters to further drill down into your data. The quick creation menu lets you record transactions, accounts, vendors, and customers quickly. You will be working with this menu a ton. You can access the notifications related to your account and new features from the bell icon. You can configure the settings for your account and for the company from the gear icon, and you can connect with customer support from the option in the bottom right corner. And while you are here, head over to the preferences. All the modules that you select here, you will be able to access in the app. I generally like to activate sales orders and purchase orders as well as recurring journals. You can send your vendors purchase orders when you need some items or services from them, and you can convert the purchase orders that you received from your customers into a sales order that you can circulate around within your company so that everyone can be on the same page of providing the right items and services to your customers. Recurring transactions come in handy when you want to work with advanced payments made to vendors. These are generally prepaid expenses. I also set the first day of the work week as Monday because I don't work Sundays. And feel free to make any other adjustments according to your preferences. If you are very particular about the image of your brand, then you can upload a logo and customize the appearance of the UI and of forms that you send to people inside or outside your organization. If you're a customer focused brand such as a P2C or a D2C brand, then select individuals as the customer type. Otherwise, leave it at business. If several users at your business have access to ZohoBooks, then you can set up approval processes so that only authorized users can approve certain transactions or actions. In a content option, you can choose to make account codes mandatory. Using these codes, you can group similar accounts together for better analysis of your data. Leave prepaid expenses as the account that tracks advance payments made to vendors and unearned revenue as the account that tracks advance payments received from your customers. I'll create transactions for both of these types so you can get a more practical hands-on experience of how these transactions work. If you manage inventory, then choose the option to track it. However, I won't cover inventory in this tutorial, so I'll leave it as not tracking. You can integrate ZohoBooks with many other applications such as Microsoft 365, Google Workspace, but best of all, you can integrate it with Zapier, which has its own integration with more than 5,000 applications. On the 1st of April, you invested $10,000 to start this new business venture. To record this transaction, you must first create the appropriate accounts. If you navigate to chart of accounts in the accountant menu, you'll find that you already have an owner's equity account, but no bank account. You can start off by creating a new checking account, fill in the necessary information, And if you want to group certain accounts together and future proof your company file, then input the account codes and then save. Also create a savings account at this point. Now head over to the manual journal options and choose the date of the journal entry. Input a note that briefly explains the transaction and then select the currency. Record the journal entry. You're investing $10,000 into the business and you are putting that amount in the checking account. One thing to note here, you cannot mix business and personal expenses together, and that is because of economic entity assumption, which states that business and personal expenses must be kept separate at all times. This has a good side to it as well, that is, your business's creditors cannot come after you personally to get their money back. Since the balance of checking account, which is an asset account, increases, you debit it by $1,000. And on the flip side, because you are dealing with double entry bookkeeping, you credit the owner's equity account to increase its balance. If you want to attach documentation, you can click on upload file and then select the appropriate document. ZohoBooks supports a variety of formats for this. Then save and publish. Here's a nice template that shows the journal entry. So this is our first look at the trial balance. We'll come back to it again and again to look at the way transactions change the balance of accounts in your company. Trial balance simply lists all the accounts and their balances, and the total of debits must equal total of credits. When not using software, accountants prepared financial statements based on the trial balance. You can head over to the accountants section and choose the journal entry, updated the balance in the checking and owner's equity account, and the changes are reflected here. The total of the debits and credits are equal. On 1st of April, you purchased a new computer from Texticals Co. and you assume that the service life will be 3 years. That is, the asset will provide you benefit for 3 complete years before you write it off completely or before you sell it off. Customer and vendor transactions offer further categorization of your data so that you can create custom reports to find out your key customers and vendors with whom you spend the most amount of money with, and these reports will further help you make key business decisions such as to focus on a particular customer segment or to negotiate better terms with a certain vendor, such as vendor display name, vendor email, and vendor phone. Whenever you want to send a purchase order to this vendor, you can directly from ZohoBooks choose the currency for the transaction. If you owe money to this vendor, then input the amount as opening balance. The payment terms define the number of days that you have to pay back a bill received from the vendor. Net 15 means that you have to pay the bill in 15 days and net 30 in 30 days. You can mark this option if you want to track payments for a 1099 vendor. You can also input the address for the vendor. Payments are remitted to this address. From the account section, create a new account. Create a fixed asset account with the name of computer equipment, enter the appropriate account code, then save and select. Update the rate and quantity and verify the total amount. Input notes to summarize the transaction and upload receipts for documentation purposes. Select save and close. You have to record the purchase of a fixed asset. The transaction that you recorded results in an increase in the balance of the computer equipment account and the accounts payable account. The accounts payable account stores the amount that you owe to your vendors. It is a current liability account, so it has a natural credit balance. And you can see that here that the balances of the two accounts have increased. Now, on 30th of April, you pay back the amount to Texticals Co. Recording the payment. Head back to the bills page and select the unpaid bills and then record payment. Input the amount of payment made, the payment date, the payment mode, and the account that you paid through. Summarize the transaction as a note and select save. Trial balance. Head back to the trial balance and you can see that the balances of both the accounts payable and checking account have reduced by the same amount. Purchases by vendor. If you ever want to look at purchases you have made with vendors in your company, you can use the purchases by vendor report. Creating recurring transactions. On 5th April 2023, you received an invoice of $50 for a subscription from Adobe, and you paid this invoice upon receiving it. Let's just start by recording a transaction first. Create a new expense, select the date of the expense, add an account for design expense, summarize the transaction, and save. If you view the journal entry, you can see that the expense account increases by $50, whereas the checking account decreases by the same amount. Recurring transactions. But since you have to record this transaction each month, you can automate this process to avoid the repetitive work. Go to recurring expenses and create a new recurring expense. Input a name for the task, set the frequency at which the transaction should be repeated, input a start date and date. Based on these three factors, ZohoBooks will create the required transactions automatically. Select the expense account and enter the amount. Select the account that you paid through and the vendor to whom you will make the payment. Input notes and save. Even though you have created a recurring transaction starting May, you need to manually create the entries for the month of May, June, and July because the date on which these transactions will be triggered have passed, and you can do that with the create expense option. Just change the date of the transaction and save. Repeat for all the missing entries. And on the next recording date, ZohoBooks will automatically record the expense. You have the option to stop this recurring transaction at any point in time. Expenses and prepaid expenses. On April 15th, you contacted a freelance web developer to assist with a project, agreeing to pay $800, of which $400 you paid immediately and the other $400 after the completion of the job. Let's start by creating a new vendor. Input the essential information and select the default payment terms. A 1099 vendor, also known as an independent contractor, is one you have paid $600 or more during the current financial year. You need to report the payment made to these independent contractors through the form 1099 to the IRS. To collect the key information for all of these vendors, you can collect the W2 form from the vendor so that you have all of the information required to file the 1099 tax form at the end of the year. You have made a payment even though you haven't received the benefit. So, create a new payment. Select the vendor, input the payment amount and date, select the method of payment and the account paid through, and save. In the pop-up, ZohoBooks informs you that the amount will be recorded in the prepaid expense account. Back in the trial balance, you can see that the transaction you recorded updated the balance of the prepaid expense account. On the flip side, the balance of the checking account reduced. Recognize the payment. Record the bill that you received from the developer. Then apply the vendor credits, which will reduce the amount of the bill by the amount that you paid in advance. Input the amount to apply and save. And the balance of the prepaid expense account has gone back to zero. Record the payment for the rest of the amount to clear the balance for the web developer. On the 1st of April, you paid $6,000 as advance rent for the next 6 months. People often work with prepaid expenses such as prepaid rent, and what you do is you store the amount that you have prepaid to your vendor in the prepaid expenses account, and when you receive the benefit from the payment that you made, you record the expense by transferring the amount from the prepaid expenses account to the rent expense account or to the appropriate expense account. Create an account for the vendor and then record a new payment. Fill in the required details and save. ZohoBooks saves the amount as a prepaid expense. Recurring journal to recognize prepaid expenses. Create a new recurring journal. Input the profile name, the start and end date, and the frequency to repeat at. Enter a note to summarize the transaction. Since you have to recognize the expense, debit the rent expense account and credit the prepaid expense account. You are ultimately transferring the amount from prepaid expenses to the rent expense account, which is an actual expense account that appears in the profit and loss statement. The amount for both debits and credits is $6,000 divided by 6, which is $1,000 for each month. And finally, save this transaction. Create the journal entry for the past months using the recurring journal as a template, and this process I have showed you earlier, and you have automated this task as well. You can now see the updated balance of the rent expense account and the expenses that have not provided you any benefit yet are still in the prepaid expense account. Unearned revenue. On the 2nd of April, Cool Cars commissioned a web design for their new product launch. You both agreed on a price of $2,000, half to be paid upfront and the rest upon completion. On the 3rd of April, Cool Cars paid the upfront fee of $1,000 via bank transfer. How do you record the amount that you received from this customer? As I said earlier, in accrual accounting, you record the revenue only when you provide the benefit to the customer. Until and unless you do so, the amount is stored in the unearned revenue account, and when you provide the benefit, you can recognize the revenue. The journal entry for this transaction debits the checking account and credits the unearned revenue account. The customer deposited the amount in your business's checking account. That is reflected here in the trial balance. On the other hand, the balance of the unearned revenue account also increases. But why? An unearned revenue account is a current liability account. The money you received as advanced payment from the customers puts you in debt. You owe the benefit to the customer. You have received the amount, but you haven't yet earned it. On 15th April, after completing the job, you invoice the customer with sales term as net 15. Create and send an invoice to the customer. To track the income and expenses for the products and services, you can create items. The updated report shows that your customers owe you a total of $2,000. Apply credit. You have provided the benefit to the customer against the advanced payment received, so you can record the amount as revenue now. ZohoBooks saves the advanced payments from customers as customer credit. You can apply the credit on an open invoice to reduce the balance that the customer owes you. Select Apply Credit and input the amount to credit. Received $1,000 as advanced payment, so apply that amount and then apply credit. The balance due now reduces from $2,000 to $1,000. Record payment. Record the payment against the invoice. In the payment method, choose check and deposit the amount to undeposited funds account. The undeposited funds account temporarily holds the amount that you have received but have not yet deposited into the bank account. Businesses generally collect checks and deposit them all on a single day. Save the invoice. Instead of going to the checking account, the amount goes into the undeposited funds account. On the 31st of May, you deposit the account. Head to the banking menu and choose the checking account. Add transaction and choose deposit from other accounts. Enter the date of the deposit, the amount, the payment method, and the account or the customer that you received the amount from. The trial balance now shows that the sales account reflects the income of $2,000 generated from this customer job. Invoicing. On 15th April, Photos Plus ordered a photo editing job that costs $200. You complete the job and invoice them for the amount payable in the next 15 days. You invoice those customers who purchase from your business on credit. Now, if the customer pays at the time of the purchase, then you create a sales receipt and issue it at the same time of the purchase. You record a new invoice and input the essential information. based on the net terms, which define the number of days in which the customer must pay back the amount. ZohoBook updates the due date for the payment. On 30th April, Photos Plus makes the payment against the invoice that you sent. To record the amount of payment received, you can select the received payment option and input the amount received from the customer, the mode of the payment, the account that the amount was deposited to, and then save the form. Since the customer no longer financial statements summarize the activity of a business for a particular period of time or at a particular point in time. You have three main financial statements. The first is the balance sheet, the second, the income statement, which is also known as the profit and loss statement, and third is the cash flow statement. Let's look at the trial balance once again, because when you look at it, you can see that the trial balance is cleanly divided into two sections. First, you have the balance sheet accounts, which are permanent accounts, and then you have the income statement accounts, which are temporary accounts. The balance sheet gives you a snapshot of your business's financials, of a business's financial health at a given point in time, whereas an income statement shows the net profit generated over a particular period of time. The three financial statements are related to each other. You take the net profit from the income statement and you plug it into the balance sheet. The balance sheet is the accounting equation. It simply states that the total assets must be equal to the sum of total liabilities and total equity. If these two sides aren't equal, then you have got some problems that you need to troubleshoot, you need to analyze and fix. For that, you may have to post what accountants called adjustment entries. The cash flow statement is very important for businesses, especially small businesses, because cash is king. It is the most liquid of assets available to your business. And when you create a cash flow statement, you take the net income from the income statement and you reverse all of the non-cash transactions and adjust the flow of the working capital. The cash flow statement is divided into three parts, that is cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. Operating activities are the main revenue generating activities of your business. Think of marketing, distribution, manufacturing, and supplying. Next is the financial activities, which is raising debt or equity or paying off debt and equity. And then you have the investing activities, which is investing in plant property or equipment and selling off plant property of or equipment. These are not the main revenue generating activities of your business. Then there are other vendor and customer reports, such as the accounts receivable aging report and the accounts payable aging report, both of which show you how much you owe to your customers and how much you owe to your vendors. Now the key thing here is whenever there's an amount due, you will be able to see in these reports whether your customer owes to you or you owe the amount to your vendor. And we also have a few financial ratios that help us analyze and compare the performance of our business with other businesses in the same industry. First, we start off with liquidity ratios. The two most important of these are the current ratio and the asset test ratio. The current ratio is current assets divided by current liabilities, and it simply shows you the ability of a business to pay back its short-term liabilities in a short period of time. But if there's a business whose working capital is tied up in inventory, then you need to go and look at their asset test ratio, which is the quick ratio. The asset test ratio takes the current assets and removes the amount of inventory and prepaid expenses from it. So what you are left with are very liquid assets in the numerator, and then you divide that by current liabilities. You also have profit ratios such as the gross profit ratio, the operating profit ratio, and the net profit ratio. If the gross profit ratio is high, whereas the operating profit ratio is low, then that tells you that you need to look at the operating expenses and minimize them as much as possible in order to maximize your gains from your business's financial activities. And at last, we look at the audit log. It lists all of the user activities that have been performed till date in your company file or through your account. So this is a very important feature for administrators of ZohoBooks. So if you have an admin account and you need to manage different users, and if certain users make certain kinds of transactions, you will be able to review them through the audit log. That's it for this tutorial. If you liked this video, then subscribe to our channel for more awesome content on how to use financial software and manage the finances for your business.